Hello, and welcome to myfinanceteacher.org. It's time again for our market review, and we're going to have a look at precious metals, the general stock market, and energy. I'm going to start with the US dollar. Last time we looked at the US dollar, I think it was around a week ago or so, I said there was more or less sort of an equal chance of the US dollar just dropping back down from that retest of the 50-day moving average. There was also a chance of dollar continuing up for just a short while before actually dropping back down into the end of the ongoing intermediate cycle. What transpired since then is dollar actually followed the first scenario, just dropped back down from the 50-day moving average. And I think the dollar is now 18 days into its short-term daily cycle, and it's now 146 days into its intermediate term cycle. Usually these intermediate term cycles last for just over half a year, and the shorter term cycles on the US dollar last for around a couple of months. So both of these usual durations of the intermediate and short-term daily cycles tell me that, well, dollar will probably keep sliding down for just a few weeks, maybe around, let's say, 3 weeks, 4 weeks, and possibly at the very end of its intermediate cycle, dollar might actually come down to its very long-term support resistance zone at about 88. We've also mentioned this zone in our previous video. And from retesting 88, I think there is a good chance that dollar will finally bounce into the rallying stage of its new intermediate cycle. So what it means for gold is over the next short term, I think gold should generally perform well. And once dollar comes to this 88, that support zone, the question will be whether dollar will actually bounce immediately into the new intermediate cycle out of that support zone, or whether dollar will kind of churn around that support zone for a while before starting that rallying stage of a new cycle in earnest. So that, I think, might determine the performance of the intermediate cycle on gold. After all, since the middle of December, this correlation between the US dollar and gold has been negative, as you see at the bottom part of this chart. So moving on to gold, what I see on the chart is that gold started its new short-term daily cycle. This daily cycle is still very young, it's only at 7 days old. And usually these cycles last for around 1.5 to 2 months. Of course, those sometimes can be longer. And this average duration tells me that we'll probably see gold climbing upwards for maybe 3 to 4 weeks before it will correct into the end of its short-term daily cycle. Of course, there is also a chance that gold drops down hard from here to give us the correct short-term daily cycle. That would mean that the previous low on the 18th of January was not actually our correct short-term daily cycle. That drop below the previous low will tell me that, well, actually the short-term daily cycle extends into that 2 months duration or something like that. That, of course, is likely. But based on the performance so far, including the fact that gold still is above its support resistance zone of 1850, although it's very close to dropping below that, and also including a lot of these wicks pointing downwards, which is usually a bullish indicator, I think there is much better chance that gold is in its new short-term daily cycle, and it will probably generally trend upwards over the next, say, 3 to 4 weeks. However, there is also a concern that this trend upwards is not going to be an easy one for gold. So although this blue line goes all the way up to around $2,000, well, it's questionable whether this short-term daily cycle will bring gold as high as that round number. But even if $2,000 is not reached within the ongoing new short-term daily cycle, I think gold will at least retest the next resistance zone at around 1960. That's based on these November highs as well as more recent early January highs. And actually what I might do once gold reaches this 1960 resistance zone, I might actually reduce my allocation to precious metals a little bit for the reasons I will discuss with the members at myfinanceteacher.org. By the way, if you want to have more frequent detailed analysis of a range of assets, as you see from this quick scroll, I do update the members on a range of assets pretty frequently, Why not join us at myfinancesteacher.org? You can do that by clicking this register button. The first month is only $5 and it's $10 per month after that. Moving on, let's have a look at the gold optimism index, which over the last couple of weeks has dropped significantly from this red line above 70 down to current 53. And that is a good sign, I think, because on one hand, I don't really expect much further downside on precious metals. And on the other hand, this means that there is still a lot of potential left on the upside before gold becomes a little bit overheated. Remember, generally you want to be greedy when everybody is fearful, and you want to be somewhat cautious when everybody is greedy. So once this optimism index reaches to this red line and breaks above that red line, that's probably when you really want to be a little bit careful. So seeing this index far below the red line with limited downside potential on gold price makes me somewhat optimistic for the gold price. Next, let's have a look at silver, and the interesting thing, which is, I think, another positive indicator for precious metals, is that silver is actually outperforming gold. We see silver has already given us a higher high recently in early January as opposed to early November high, and gold has at the same time given us a higher low back in the middle of January versus the previous low at the end of November. So silver is already trending upwards over the last several weeks, and that's a positive sign. Another positive sign is that silver is above both its 200 and even its 50-day moving averages, while gold is below its 50-day moving average. So that's another sign for me telling me that gold will probably break above its 50-day moving average once again relatively soon and continue upwards for another few weeks. Next, let's have a look at the optimism index on silver, which shows a similar situation to that of gold. It's far from the red line, so there is a lot of potential for higher silver prices over the next several weeks or a couple of months, while we reach the top of the ongoing intermediate cycle. And on the other hand, although at previous intermediate cycle lows, this optimism index usually used to retest the green line, this time I think the downside is somewhat limited. One of the reasons for that is that the ongoing intermediate cycle is still relatively young. It started only at the very end of November. Next, let's have a quick look at the general stock market. Looks like the general stock market is also in a relatively young short-term daily cycle, which so far has been going on for 18 days. And once the US markets open today, that will turn into actually 21 days. And the intermediate cycle, once the markets open, will turn into 123 days old. Again, usually these intermediate cycles last for just over half a year. So I think both the regular duration of short-term and intermediate cycles point to a general upward momentum in the general stock market for possibly another 2 to 3 weeks before correction down into the short-term daily cycle and possibly even the intermediate cycle low. So in the very short term, I'm still cautiously positive on the general stock market, especially with the FOMC meeting coming up at the middle of this week. With the stimulus propositions, I think the Federal Reserve will be happy that the government is helping the Federal Reserve in propping up the economy or the markets. And I'm pretty sure that the Fed is likely to confirm that the interest rates are going to stay low for another, well, say, couple of years or so. Additionally, this week and next week, there will be a lot of earnings reports from large tech giants. And with the lockdowns still ongoing in many places, I think those earnings reports are going to be somewhat positive. After that, though, going into the top of the ongoing intermediate cycle, I think it will be time to get somewhat careful, somewhat cautious on the general stock market, as shown by this optimism index. Firstly, the optimism index is far above the red line, and that's the first warning. But as we see from history, the intermediate cycles on S&P 500 usually top after this optimism index has stayed above the red line for quite a while. And in the ongoing intermediate cycle, starting at the end of September last year, this optimism index has already stayed above the red line for quite a while. So possibly another few pokes above the Bollinger Bands, another poke into the oversold area on the 14-day RSI, before you really got to be careful and bring your stop losses to the levels that you are comfortable with. And lastly, let's have a look at energy, looking at crude oil. Crude oil is cooling off after coming close to its resistance zone around 54.7. That's based on the previous high in February last year. Additionally, we see that the 14-day RSI has already poked into the oversold area for a couple of times since the middle of December last year, and the price itself has already poked multiple times above the Bollinger Bands, which are now not that narrow. So what I think is going to happen on crude oil is it's probably going to cool off for a short time before another test of that resistance zone. Why do I expect another test of that resistance zone? Is because the ongoing intermediate cycle is still only 84 days old. Usually these cycles last for about half a year or so. So I think there is still time within the ongoing intermediate cycle to at least retest that mid-50s on the crude oil and possibly even poke above that for a short while before correcting into the end of the ongoing intermediate cycle. At the moment, crude oil is a little bit far above its 50 and especially above its 200-day moving averages. But if there is a bit of cool off over the next several days, that will allow the 50-day moving average and the 200-day moving average to catch up with the crude oil price a little bit before the price runs higher again and finally corrects into the intermediate cycle low. Next, looking at the optimism index on crude oil, we see that it's recently been above the red line already, and just over the last few days, it's corrected back down below that red line. Although optimism is pretty high, and that generally should tell you that you should be somewhat cautious, as I said, I still think there is a good chance for crude oil to remain relatively strong for another short while before coming down into the intermediate cycle low. Looking at history, this optimism index, if it pokes above the red line relatively late in the ongoing intermediate cycle, then that should generally make you cautious. On the other hand, if optimism is poking above the red line as it's doing now, but it's still pretty early in the ongoing intermediate cycle, there is still a good chance for optimism to bounce up again and give us several pokes above the red line before the intermediate cycle drops into the cycle low. So in summary, I'm still optimistic on crude oil over the short term before it corrects. And looking at XLE, it's nice to see that XLE is bouncing last Friday from its support zone somewhere between 40.5 and 42. And since in the middle of January, XLE didn't really reach that resistance zone at 46.8. I think similar to crude oil, XLE will also, after a bit of a cool down, possibly retesting this 50-day moving average, will also have another attempt at retesting that resistance zone. So for that reason, I am still holding XLE and a lot of other interesting positions in this fictitious portfolio, which actually tracks all the trades I've ever made since the start of the product. I would guess that not many analysts are that transparent with their trades. If you want to have more details on our holdings and the trades, why not join us at myfinancesteacher.org. And that concludes the video for today. I wish you a productive Monday and good luck in your trades.